Hello everybody, this is Tony from Financially Speaking, Bookkeeping and Consulting. I'd like to welcome you to my video presentation on planning strategies and reporting requirements for a new service-based business. I'd like to take this time to congratulate you, as it's obvious that you're in your early stages of your new endeavor, and I'd like you to be able to pat yourself on the back and to understand that this isn't an easy process, but I fully think that if you walk through this whole entire video right to the end, you will have a better knowledge of everything that you need to prepare, lists you need, and questions that you want to ask. What I want to accomplish with this video for you is to give you the tactics that you will need to approach this from a business owner point of view. I want you to know what questions you need to ask in a meeting, as well as what answers you want to leave a meeting with. So it's not just about what you have to present to somebody or what you have to ask, but it's also on what they will provide you in terms of what you need to operate your business. So we're going to walk through about 6 steps. And just to summarize, it'll be things like business plans, reporting style, where you will be operating from, whether that's a home-based business or a physical location outside of your home, what kind of services you'll be providing, whether you're going to be paying employees or hiring contractors. And another big thing is just what reporting requirements there will be for your business when it comes time to launching. And this is just as important as the information you need to go into a lending institution. I mean, you need to understand the reports that you will be creating throughout your financial journey with your business. So yeah, I've run my bookkeeping business for 13 years now. So not only have I been through this beginning planning phase stage, I've also walked through it with a whole bunch of my clients who were also in that phase when they first started with me, and I have a really good knowledge of what you will need to do so. I want you to walk into your first meeting with your accountant with your head held high and fully confident that you have all the knowledge of the right questions to ask. And you will walk into your lending institution with every single document that they're going to ask for, so that there's no added stress and there's no added frustration or time delay for that matter, when you have to go looking for something. I want you to walk in there and be fully prepared. So with that all in mind, let's get started. Let's go to the first slide and let's start learning. So we'll start off with a little bit of an introduction. What I would first like to talk about is the planning. And when you're planning in the preliminary stages, it's so crucial to do everything correctly. Now, if you have lists of things that you have to ask of a business professional of some sort, now whether that's your accountant or a business consultant, you want a list of things prepared when you walk into a meeting with one of these people, like depending on what you choose to do. Now, it's also so important for small business owners to keep accurate business records. And when it comes to financial reporting, there's so many things that will be required of you. And I want you guys to have a thorough understanding of what you need to do, the best way to do it, as well as having an understanding of what all this stuff means to you in your business and how it will help you in your analysis of your business and making any adjustments or tweaks that you'll need, in the upcoming months once you started. And it's just going to provide you with a mainframe so that you kind of walk through it step by step. you get to know it, you get to understand it, and eventually it means something. And you're able to take a report that you've created and make decisions based on this. And that's why all of this stuff is so crucial. So the planning is first and foremost, because you have to obviously plan for whether you need financing for anything, or you need to make decisions on whether you'll have employees or whether you'll hire contractors, or the type of accounting systems that you want to use, or whether you want to use a bookkeeper or do it yourself. I mean, there's just so many planning items that have to take place before you even start operating. And then you have to dive into this whole world of reporting. And I mean, that's a whole new thing. And I'm going to give you the tools to give you the confidence to be able to do all of this. And then, you start doing it, and eventually you come to a better understanding of how it all works. And then, if you decide that you want to hand it over to a bookkeeper, well, that's totally cool, But at least you've got the understanding of what all these things mean, and what the documents that you have mean, and what you have to keep, how you're going to file it. All of those things are important too. Now, the accuracy of your financial reporting is so important. And it's important for a lot of reasons. It's not just tax time, it's for things like future financing. You pre plan for your beginning financing for stuff like capital asset purchases or startup costs. But I mean, you may require future financing for things that come up, once you start operating. And, you want to have accurate records so that you can measure your business's profitability. And then, you also want to have reports so that you can make future business plans. So whether you're going to hire someone in the future, or another person, or you're just going to change the direction of your business. I mean, this all requires accurate financial reporting. And so, shy of teaching you an exact system, we're going to work through the essentials and get you up and running so that you can take it from there, and you do that with confidence. So let's go on to the next slide. All right, so here are a few items that I want you to discuss with your accountant or business consultant in the preliminary stage. So, there's the main category, of course, would be business plans. You've got to walk into a meeting with a set list of things that you want to discuss with them. Now, there are certain things that need to be discussed right off the bat because you have to get this all set up. But then there are, two-step processes. So, the first thing that you'll want to do, which is absolutely mandatory, is decide if you're going to be an incorporated or a non-incorporated company. So, of course, this has tax implications at year end. So, this is a really crucial decision. Then it comes to financing options. Now, not only do you want to figure out, where you're going to finance through and whatnot, you have to know before you walk in there the things that you have to finance for. So now we've made reference to these things before, but it may be capital asset purchases, such as construction equipment for a construction company, or startup inventory costs for a retail business. I mean, there are loads of different things that you may have to finance for, but you want to have this all down on a list of some sort before you walk into the meeting. Then your accountant will help you tweak these things, and they may give you suggestions as to other things that you're going to need to finance for. Then, once you've got that all established, then you're going to go into how you're going to do this. So, do you need a bank loan? Do you want to start up a business line of credit? I mean, there are very many different options for you at this point. And, they will help you walk through this and come up with the best alternative for you and your business. So the next thing would be budgeting and cash flow projections. Now, obviously, to try to figure something like this out before you've even operated at all is tricky. But you kind of want to come up with a trial version of a budget and a trial version of a cash flow projection. Because, I mean, obviously, you don't know exactly what your expenses will be, and you know exactly how much revenue you're going to generate right off the bat. So, I mean, this can change a budget or a cash flow projection drastically. But you want to have a jumping off point. So, you want to do the best you can with the minimal amount of information that you'll have right at the beginning. And then you go, and once you've got this operating, then a few months down the road, you know, you make tweaks and you make adjustments to these budgets or cash flows. So, I mean, it's not set in stone, but you definitely want to start off with something. Um, then you'll need to also decide your fiscal reporting start date. So, some companies will use a January 1st start date, you know, which would then, you know, end on December 31st of that same year. So that would be considered a calendar year. Now, based on your type of business, I mean, some other businesses may start, you know, partial way through the year. So, you know, you may have a March 1st starting date and, you know, end on the last day of February of the following year. I mean, again, your business professional is going to be able to make suggestions based on your business type. And, you know, because some businesses may be seasonal, so your accountant may suggest that you have an off calendar year. So, I mean, all of these things are going to be talked through and then decided upon. And, you know, once you've decided, then it's set and you go from there. So the next major category is your reporting style, and you know, this is another thing that your accountant would be able to help you with, like, majorly. And we'll get into this in more detail in a later slide, but just for now, the two options would be a cash-based accounting system versus an accrual-based accounting system. Now, these are just different ways of reporting. But again, your accountant is going to be able to kind of lead you in the right direction in terms of how your business runs, what's best for you, how you want to manage your business, and what kind of reports you want to produce. So these two methods would obviously produce different types of results, and your accountant will tell you what works best for you. So, another thing that you will definitely want to decide prior and have to decide prior to operating your business is whether you're going to run a business outside of your home or whether you're going to run a home based business. So, these are two different categories, and obviously, there is distinct differences just strictly in location. I mean, if you're operating outside the home, you will have to look into leasing or renting a physical location from which you'll manage your business. Whereas, you know, obviously, if you're a home based business, you're working from your home. So this is not required. You don't have to plan for leasing or renting or whatnot. So these two categories, we're going to kind of compare them throughout the next couple slides. So we're going to start off with businesses operating outside of the home. So therefore, they have a physical location. Then we're going to move on to businesses which are operating from inside the home. And again, we're going to give examples of that. And, you know, throughout though, I will make note of the differences in reporting. And I'm going to do that mostly from the home based business side because um, that is where the distinction will lay. Like, that's where the very obvious difference in reporting will come. So, we will start off with businesses operating outside of the home. So, some examples would be construction or trades companies, retail sales businesses, or perhaps professional services. So, this could be a bookkeeping service or an accounting service or maybe an architectural business. I mean, any type of thing like that. Um, or maybe you run a cleaning business. I mean, this is a service as well. So these are the type of things that people can do in a location outside of their home. And again, you're not limited to these, obviously. I mean, there's umpteen dozen different businesses you could be running. So I'm not limiting it to this, but these are kind of some general examples. Um, then we'll get into home based businesses. Now, a couple of examples here will be professional services again. So, I mean, I'm a bookkeeper and I work from my home, and or you could run your accounting business from home. Um, any type of thing like that. You may have a professional service where you provide, um, you know, pedicures or manicures. I mean, there's so many unlimited options here too. I'm just giving you a few examples. You may have product sales, or you may be into um, direct sales where you're earning a commission income. I mean, again, there's so many different types of businesses. I mean, it's basically unlimited for either of these categories. But we're going to refer to these six types of businesses, three operating in a physical location outside of the home, and then three working from the home. So let's get into that. Now, another major category is paying employees. So this is where applicable when you've decided to do some hiring. And when it comes to paying employees, there's a couple of decisions you're going to have to make. Um, you're going to have to decide if you're going to pay a salary or an hourly wage. So with a salary, there's no vacation paid and there won't be any vacation accumulated. Whereas with hourly pay, there will be vacation calculated and paid, and it'll be either on each check or it will be accumulated for use at a later date. So let's say they decide to take a vacation 6 months in to the new year, then they will choose to use some of this accumulated vacation pay to just compensate them for the time that they're taking off. So you'll need to calculate this vacation pay based on their wage per hour and their total earnings. And you'll also want to calculate stat pay for any stat holidays, whether they've worked them or not. Because if they've worked them, then they will be given a time and a half wage for that day. Whereas if they don't work it, then it's just based on a percentage of what they've earned in the 4 weeks prior to the holiday. You'll also have to determine payroll frequency. So if you want to pay bi-weekly, which would be every 2 weeks, semi-monthly, which would be 2 times a month, or monthly, which would obviously be 1 time per month. Then there may be things to consider, such as employee reimbursements. So you may reimburse them for mileage. So if they've traveled somewhere, you may pay them at a rate per kilometer. Or you may reimburse them for certain expenses. So let's say they went to a job site and it was a long drive and you're going to reimburse them for the meals that they ate along the way. Then these are things that you would add to their paycheck on the pay date. So there will be several different ways of calculating payroll and source deductions. You can do manual calculations. You can do, or use rather, payroll services. So they would do all the calculating for you and simply provide you with the information of payment amounts, and they would even remit any type of deductions on your behalf. So they would remit this and then you would pay them back for that. Um, You can also use an accounting program, which would have access to online payroll tables, and therefore you could still do it, but it's still being calculated on some type of software. So now we are on to financial statements. Now this is huge because now you're going to see where everything that you've been reporting is going to show up when you prepare your reports. So there's two main categories of reports, and that would be your balance sheet as well as your income statement, which will be on the next couple slides. So on your balance sheet, this is basically totals, and they will be representative of a certain date. So let's say you're reporting at the end of the month. Well, then it'll be the totals as of that last day of the month. So some categories that you're going to have on your balance sheet are assets, and there's a couple different types of assets. There are current assets, which would be for things like bank accounts or prepaid accounts or accounts receivable. These are all totals that consist of amounts that will be dealt with within the current year or will change during the current year. So, I mean, bank account amounts and balances are going to change throughout the year. Prepaid amounts will be eventually expensed throughout the year, and accounts receivable is going to change. When there's additional amounts owing to your company, or when clients or customers make payments on their account. So, I mean, these amounts are going to change throughout the year, but the balance as of a certain date will always be represented on this balance sheet. So there are also long-term assets. Now these are things that are going to sit on the balance sheet for terms of longer than a year. So this may be, let's say you offer a loan to somebody, and it's a loan that there's a 3-year term on it. So this would be considered a long-term asset because you'll have this amount owing to you or your business for a period of longer than a year. Now the next type of asset would be capital assets. We've made many references to these, and they're things like construction equipment or company vehicles or computer hardware or software. Anything that hasn't been expensed in the fiscal year because it has a value of, the amount that I use would be $500. So anything less than $500 would be expensed in its entirety, and that would then show up on the income statement. But if it's a purchase of more than $500, then it'll show up as a total on your balance sheet, at which time it will then be depreciated at year end. So a lot of these things are going to be determined by your accountant. What they figure is the kind of that price point, which determines whether it will be expensed in full or put on your balance sheet and then depreciated. So, it's just something to keep in mind and to, refer to what your accountant suggests. Then there will also be intangible assets, and these are things that you can't physically see. So it's something like goodwill or stuff like that you've paid for, but it actually isn't a physical thing, but it represents value on for your business, and that's why it sits on your balance sheet as an asset. Now keep in mind again that assets are things of value to your business, as opposed to the next category, which would be liabilities. Now these are amounts owing, and there will be current liabilities. So these are amounts owing within, let's say a year, versus a long-term liability, which would be more like a 3-year loan. So this will sit on the balance sheet for longer than the period of 1 year. So this is kind of the opposite of an asset because it's taking away the value from your company. Because you owe more, then you have less value that remains in your company. So the next category would be owner or shareholder equity. And, there'd be three items underneath this category. There would be equity, which is the total remaining value of your company. So it would be assets minus your liabilities would equal the equity that you have in your company. Then there would be contributed capital, which would be monies that have been invested in your company, either by an owner or shareholder, and this is their independent value of the company, or rather in the company. And then there'll be retained earnings. Now, this is basically an accumulated amount of either your net income or net loss over the years, and just kind of is the remaining amount that you have after everything is said and done and all your revenue and expenses have been recorded at year end. Now we'll move on to the next type of statement, and that's an income statement. So this is where you're showing your revenue, your expenses, and what you're left with at the end of it all. So, you're either your net income or your net loss. So if you made more than you paid out, then you're going to have a net income. Whereas if you made less than what you paid out, then you're going to have a net loss. So, and this is where that's going to show up. So when you print off this report, you're going to be able to see the success of your business. So the first category on an income statement will be your revenue or income. Now there'll be 4 different types, and they're just kind of named different things based on the type of business that you're running. So, in terms of professional services, the revenue is going to be considered fees earned. In a service-based business, it's going to be service revenue. In a retail or product sales business, it's going to be simply sales. And when it comes to direct sales, you're going to have commission income. So these are the things you're going to refer to, and when you've established what type of business you're running. So the next things would be costs of goods or services, and these are the costs that are directly related to generating the above fees, service income, or sales income. And then you will have the general or operating expenses. So these are the costs incurred to operate your business. So they are the day-to-day expenses that occur and don't directly relate to generation of income of any sort. Well, everybody, we made it through to the end, and I am so excited. Thank you so much for joining me in this video presentation. It was a long presentation, but I'm hoping that you gained a whole lot of knowledge from it, and I hope that I've managed to decrease the stress level just a little bit. I hope that this video was super informative, and it will have provided you with information not only to get you through the meetings, but just to avoid some unnecessary challenges. Any little hiccups that you can avoid just make the whole process go so much smoother. And I just want you to have everything that you need to plan for and eventually report for once you launch your business. Once you get it to that point where you're all ready to go and you have your launch day, and then you're able to run it with ease as well. So you're going to have all the reporting knowledge that you require, and you're going to be able to do what every business owner wants, and that's to build their business because you've got all the foundations in place. I'd love for you to visit me at Financially Speaking Bookkeeping and Consulting on Facebook, and here you'll find access to a few, small business bookkeeping tools such as payroll or expense tracking. I also have some budgeting spreadsheets for your business. Um, just things that can help you in the financial journey part of your business. Um, I'll have lists for like filing solutions for all your paperwork, what you need to keep, how you need to file it, what you will need for year end, and whatnot. I will eventually be offering more courses, so this will be another place that you can go and access those courses if you're ever interested. So that's another resource. And as well, eventually, my hope is to start up some form of membership so that I will give people opportunities to receive tons of business related content, and including any online business information or solutions, and then financial and bookkeeping tool freebies as well. So again, thank you so much for watching this video, and I hope to see you on another video someday. So take care, and ultimately good luck with everything with your business. So take care. Bye bye.